welcome to this week's episode of the Heroes Table. I'm your host Isha, and with me, my co-host Taluius.
Hello.
So Midnight couldn't be here tonight because he was doing personal stuff. He might join in mid-show if it fits in his calendar, or if he gets home before we end. But we'll see. Otherwise, it's just gonna be the two of us. And boy, do we have some stuff to talk about. I'm not sure. We did have a couple of changes in Eternity. I think mostly related to shields, based on some feedback. I think they introduced a couple of new types of shields. Not sure if we had them typed before in the same way.
Shield.
Yeah. I'm not sure if it's if they had types before. It's the first time I hear the term shield type, but it might have been like that already. But yeah, we have the kite shields and the spell shields, and I assume, because based on what I assume the changes comes from, is some feedback regarding what abilities or what attributes shields usually dropped with.
Yes.
So I assume it's like toughness shields and will shields, but then we have a third type, I guess, called tower shields, where you don't get will at all but increased toughness.
Yeah.
If I understand it correctly, at least. So yeah, I guess spell shields would intuitively mean you get more will on those, if I had to guess, and kite shields I'm not sure exactly, but probably toughness. I guess we'll have to find out by playing the game a little bit and see what kinds of shields we can get. But yeah, I think that's the Eternity news. Team's still working on stuff. Don't know if we have announced anything new between this week and the next.
Let's see.
Don't think so. As far as
we did have a social.
Yeah, I think we talked about that last week, but we can definitely go through it again.
I think
for
they
people.
just got. Yeah, I mean, I think it looks like the actual friend, adding a friend and all that good stuff looks.
No.
Like it's implemented.
So we have Polygon integration as well on the blockchain side of things. You can synchronize to Polygon instead of Avalanche if you prefer that. I think the fees on Polygon are slightly lower than Avalanche. Not sure if that's still the case, or I haven't really used blockchain recently. So I'm not actually sure how the fees are on the various different chains. But I think that's the idea of it. Like the reason we went with the Polygon integration was cheaper transactions.
Yeah.
As usual, you don't require to interact with the blockchain to play the game, but now you have more options if you do wish to synchronize your stuff. And of course, also for the time being, the auction house still requires blockchain synchronized items to be hosted or listed.
Yeah.
So that's that. So hopefully that will be a cheaper thing to do while we wait for them to get around to getting the off-chain auction house done. So we don't need to synchronize stuff before it gets it can be listed.
Right.
And as Taluius mentioned, there's now friends or social thing where you can add friends, you can see friend requests, and you can group up with your friends and create a party directly from your friend list just by inviting them. You can also still do the old system where you just copy the party link and send that to someone. That still works too. So if you're gonna play with someone but you might not want to add them as a friend for some reason, maybe you don't know them well enough, then you can still get them in your party as well. And yeah, I think I know more features are coming for this social stuff, but I'm not sure which feature is going to be the next one. But I imagine we will have some kind of chat system eventually. Yeah. So social stuff happening. I think that's going to be important for the game, and I think at least a few of us discussed this already from the early days of the game, that like in-game communication would be an important aspect of the game, which is also why I initially made the chat extension for it that nobody ended up using, but that's probably less to do with people not wanting it to happen and more because it was extra steps to get it installed and get it set up and everything. So once it gets like properly in game, I imagine it will see more broad use.
Mm-hmm.
Yeah, and I think it's obviously very important once we go like really get to the mobile space. Yeah, we are already on mobile, but we still yet have to be in the app stores where I think the real traction is gonna be. And I think having the chats and stuff there is gonna help significantly.
Mm-hmm.
Yeah, I think that's it for the social stuff. Don't think I missed anything.
Nope, I don't think so.
Yeah. All right, let's try to do some quests and see if we can get some of those new shields. I'm not entirely sure if they are fight dependent, like it matters from where you get them, or like obviously the tower shields I imagine are from the Dark Tower, but other than that, I guess the rest, like the two other types of shields, will just be from quests.
Mm-hmm.
And yeah, I guess we can discuss a little bit about the market. Was definitely interesting over this weekend. I guess it started already last week. First we had the Silvergate Bank announcing that they were gonna close operations. I don't know if that was the week before or if it. I think their announcement about them being worried about the economy, like their own economy, was the week before last week, if I recall correctly, and nothing too much happened about that really. It kind of I saw a few headlines and then kind of went away again. I guess because it was their own decision to shut down operations because they weren't profitable, but they hadn't lost money at that point, I guess. So there was no panic. And
so
then
sound like somewhat responsible then.
Yeah, and then last week or this week happened, and the what's it called, CDIC or I don't remember the letters, but the people responsible for bank stuff and insurance on deposits and stuff. They decided to step in and pretty much close down this Silicon Valley Bank, and boy, did that do the markets not a favor, at least. That really spooked everyone, I think. And then so I don't know. Maybe we're going a bit too fast. Let's talk about what happened there. So, as far as I understand, and I'm not an expert in like United States economy and how banking works there, so I may get things wrong or I may not understand all the parts of it, but I can try to explain the way that I understand it. So, basically, what happened was that when we had all this low interest rates and like negative interest rates, the banks were like they just had money on a silver platter basically, and they were like, okay, we can do everything risk free because the interest rate is so low and even negative, so like there's no risk at all. So they made like really risky bets, expecting that the interest rate would stay zero or negative for longer than it did, I assume.
Correct. Yes.
And then suddenly the interest rates started raising quite fast, or at least faster than anyone anticipated by the looks of it. And now these bets that they made, which were longer term or medium term bets, now they got kind of fucked by that because they couldn't just get out of those bets when the interest rates started going up.
Yes.
And then eventually people wanted their money from the bank, and the bank was like, well, we accidentally locked up your money in these investments.
Right.
So they were trying to get funding to pay out the people, and then this government entity stepped in and said, that's not going to happen. And then they basically, this Friday, I think, Friday or Saturday, they basically took over operations of the bank, closed it down, and then they were trying to figure out how bad the situation is, what's going to happen to the money in the bank, how deep underwater are they. I think I read today that it seems like they aren't actually in negative money. They just have money that they can't withdraw from investments. But they're not actually insolvent. Like they do have the money, they just don't have the money liquid.
Yes.
So and I also saw some people saying they are actually auctioning off some parts of the business or the whole bank. I'm not sure exactly what, but I guess that's in an attempt to get the money that people wasn't able to withdraw. But the alternative is that was it the same government agency that is gonna maybe loan them the money that they can't pay back, so they can use this lended money or borrowed money to pay back people's withdrawals, and then once they get the money from the investments that are currently locked, they will be able to pay back the loan. And I'm not sure if the bank will be able to continue operating, or if that's if they're done for. But at least that's what I understand of it. So it seems like it turns out it's not as bad as it could have been, but still not a great situation that it happened in the first place.
Yeah.
And then how that affected the crypto market, people found out that actually both Silvergate and Silicon Valley Bank is 2 of the 6 banks that Circle has collateral for USDC in. And in the early days, we didn't know, on Friday, we didn't know how much. We knew it was 25% at max. So it was potentially about 10 billion. That was essentially potentially lost from the USDC collateral, which caused USDC to depeg, which caused extreme amounts of fear in the crypto market, because it wasn't just it wasn't an insignificant depeg, and it was pretty much all cryptocurrencies, with the exception of USDT initially, but Binance USD also recovered very fast. So you basically had almost every stablecoin in the cryptosphere except for these 2 depegging by upwards of, I think, 13 cents at the most, 13 or 14, which has not happened before, as far as I know. It was at least it was new all-time lows for most of the stablecoins. Maybe some of the more some of the that aren't collateralized stablecoins. Maybe they have more. Why can't I do anything? Maybe they have had more risk, so maybe they depegged more. But it seems like everything is slowly recovering now. I think last time I looked at it, it was only 5 cents off. Which, well, I say only, but it was 5 cents off at least. But it's trending upwards, and I think so. What happened later on is the CDIC, or whatever they are called, the agency that took over the bank. Yeah, exactly. They said that transactions initiated before they took over will be honored on Monday, and Circle has made a statement that said they requested to move the money out of Silicon Valley Bank on Thursday. So, assuming they are saying like everyone is being truthful, there should be no risk to Circle's collateral from Monday morning, which means that everyone, I guess, is arbitrating USDC back to $1 now because the fear there's no reason for the fear anymore. Again,
Right.
Assuming everyone is telling the truth.
Right.
But I don't think we have reasons to assume that they aren't telling the truth.
Correct.
So everything is looking much better today than it was even just yesterday, I suppose. And I think the funny thing is this had a really big impact on USDC specifically, and of course everything that relies on USDC. But we don't actually know if this would have an equally big impact on something like USDT or I don't know for Binance USD actually. But the only reason we knew that it was bad for USDC is because USDC is transparent, or they have some record of what they're doing. USDT doesn't, which means USDT, like Tether, could easily have had money in this bank as well, and it could easily have been worse than USDC. But because they are closed books, we don't know what they're doing with the collateral. So, I mean, everyone was fleeing to USDT because there hadn't been any thought for USDT this time around. But there was no guarantee that USDT was safe in this situation. And yeah, I think figuring that out, I think would have caused an even worse situation. So it's probably good that we don't know. Obviously, if it had been transparent from the beginning, I don't think it would have been any bigger problem. Maybe a little bit. Knowing that both the really big stablecoins were in trouble is probably going to be worse. But I think not knowing and it coming out that it's a problem, I think that would have had a bigger impact than knowing in advance that both of them are fucked. So I guess it's we haven't heard anything from Tether, so we don't know if they even had money in Silicon Valley Bank, and we don't know if they requested to get that money out before the operations were terminated. So actually, I would argue that there could still be a risk to USDT because we don't know what's happening. If they had money locked up over the weekend, we don't know if they're gonna get that money back. So I would say USDC is probably standing better right now than USDT. But I'm not trying to start any FUD on USDT. I think it gets FUDed enough. But yeah, that's just my view on things. The transparency of USDC definitely makes me because again, assuming that everyone is telling the truth, but I have no reason to believe otherwise. So I'm definitely more confident that USDC and that Circle has all the money that they claim to have than Tether does, because I don't know if Tether had money in this bank.
Right.
And I'm not sure for Binance USD either. I don't know how their books work regards to how that's funded. I know it's someone else that manages it. But yeah, I think that's the gist of this whole situation that unfolded. Maybe it's a bit of a bird's eye view on things. There's probably much more technicalities that I am not aware of or that I don't know.
No, I think you pretty much covered it. A lot of money got tied up in extreme long-term funds, and people wanted their money and couldn't get it.
Yeah.
Pretty much.
And depending on what happens tomorrow, we might see longer term, maybe not long term, but at least longer terms effects. If people can't get their money immediately, then we might start seeing companies failing to pay their employees. And I don't know. Other banks could have problems, especially if people are rushing to the banks tomorrow. We could see bank runs happening on at least smaller regional banks, maybe.
Kind of be surprised.
Yeah.
Like I mentioned last week, like I zero concern about my local banks because they're not involved in that kind of stuff.
Yeah, that's true. If they have the money, obviously it's not going to be a problem.
Yeah, like I mean, especially in where I live, like there's a much more conservative. I'm not sure how to say this politely. I guess there's a lot less shenanigans happening where I live in terms of like what banks are doing with the money. They're not getting themselves upside down, you know. So,
but we've definitely seen a lot of people over the weekend like queuing up at banks. So it's definitely realistic that people will be going to the banks tomorrow, for sure. I think. But
maybe on the coast, but in America, not in the Midwest. That's not going to happen at all. I can guarantee it.
Okay.
So, but I mean, I could see that happening in like California, but it's not happening in the Midwest.
Yeah, and again, as we said, if the banks have everything in order, then shouldn't be a problem for them. But I'm pretty sure it also in America that there's this situation where banks aren't required to have 100% of the funds all the time, right? They only have to have like what 70% or something.
Yeah,
I don't remember how much, but they have to have a certain amount. But the rest of it they can basically invest, or I don't know if they loan it out to other people or what they do. But they don't have to have like 100% of the customers' money in the bank at all times. But they I believe they have to have a significant amount. But yeah, so bank runs are technically still possible if 100% of the customers decide to withdraw 100% of their money. Then I think most banks would probably get in trouble.
Yeah, I mean, I think that's fair to say for most banks, is obviously they have to be able to make money in order to function as a company. So that means they have to take the deposited money and do something with it, right?
Yeah.
So, I mean, that's to be expected.
Yeah.
So the interesting thing about the SVB bank, and I can't remember who posted that, it was on our dev chat, that like 97% of the money in that bank was above and beyond the FDIC's 250,000 insured amount. So I mean, it's probably not everyday people, right? Like they don't have their $15,000-$20,000 at this bank. It's like major.
I think it was startups generally and
major startups, companies. Yeah, so I mean, it's not your everyday worker that's getting hammered on that at that bank, except for the fact that maybe where they work, those companies had the money there, like you said earlier, and maybe that they can't get it to pay payroll or something.
Yeah.
So, but it is interesting that what's interesting is that none of the money is unaccounted for.
Yes.
Like everything they did was not necessarily like they didn't do anything illegal, right? Like they made some long-term decisions with some long-term investments that the interest rate is so low that people wanted to take it to some place that could get higher.
Yes.
And then at that point, all of those they become liabilities, right?
Yeah. Yeah. So basically, yeah, I think I forgot to mention again with the raising interest rates, then people would be able to save up their money in like somewhere else. And I'm not entirely sure how it works with the Federal Reserve, but there's some place you can put your money and then you can get like the rates that the Federal Reserve is advertising or talking about or whatever.
Bonds, yeah.
Yeah, and that would be where people would want to put their money, because these returns that Silicon Valley Bank would have made or would have advertised based on their investments, which was, I don't know, maybe 3%. But in a world where the interest rate was negative, 3% seemed pretty good. Or I don't know, maybe 1% or whatever.
I think it was less. Yeah.
Anything more than zero, basically.
Yeah.
Seems,
So yeah, like if you've got a bunch of, but you've got billions of dollars at 1% and 2%, but potentially risky investments, or you could take that money out and go get a bond for 4%.
Yeah.
You know, essentially doubling your potential return. I mean, like it's unfortunate that it happened the way it did.
Yeah, it is. Yeah, and then basically a lot of, because the majority of people in Silicon Valley Bank was investors in one way or another. They obviously wanted to put their money in better investments, and that's where the problem really arose from.
Yep.
And it's difficult to say who's at fault. It sounds like the consensus is that the SEC is partially at fault, or the Fed, is partially at fault, because they were just like raising interest rates with it very fast. Maybe faster than was reasonable. But again, that's out of my, I don't know about that, but.
Yeah, I mean, I think there's a lot of things, a lot of variables involved with that. And, you know, they have to weigh the general population's ability to, you know, interact in the marketplace, right? So if the inflation amount goes up and stays up, then the average person has, you know, less money to do anything with. And that's a problem for the Fed.
Yeah.
So they need people to be able to, you know, interact with the economy. And so I think you have a situation where, you know, of course, the Fed's issue isn't necessarily their own issue. It's an issue that's created by the government by essentially creating money out of thin air. So they rack up all of these debts and give people money, and then somewhere it has to balance, right? Because the ledger always balances. No matter what you do. It's kind of like gravity. Like, it's always going to push back to, or it's going to try to push back to equilibrium. And so they are left with, what are we going to do? The government's, you know, essentially create all this money out of nothing, makes prices go up. The Fed doesn't have much choice if they want to, you know, keep the general public, you know, being part of the economy. Otherwise you push them out, you know, like rent goes up and food goes up, and but their pay is not going up.
Yeah.
And so then they can't, you know, participate.
That would be very bad as well, obviously.
Yeah, I mean, we're seeing it. It is still happening here. Like, it's getting out of control in some locations where people just can't afford to live there anymore. And I see it all the time.
Yeah.
It's like they live in places where real estate's gone up so fast that wages haven't, and so like they're getting pushed out of the market in terms of being able to rent or even purchase a place. And so the only options they have is to leave that area. And so the idea being is that if the demand goes down, then the prices for that real estate would drop too, you know? So it's just, it's a mess.
Yeah, it definitely is. And yeah, I don't know if we've seen the end of it, but I think we are definitely in a better position today than we have been over the weekend. So I think
Oh yeah.
I think people are starting to calm down again. Like we got a spook, and it turned out it wasn't as bad as we feared, but it's still pretty bad. But there's a solution for it that doesn't end up in some big hole where the money vanished.
Mm-hmm. Yeah, I mean, like this is a little different than some of the other things
Yeah.
that have happened. In that, like
Mhm.
the money didn't go anywhere. There's nothing wrong's happened other than that they just made a bad bet.
Yeah.
In terms of the long-term nature of the investments.
Mhm.
So, like if the interest rates were low, we wouldn't be talking about this.
Yeah. Yeah.
Like nothing. Like again, like nobody would care because they wouldn't be trying to take their money out to get a better deal.
Mhm.
So
Yeah, and I mean, banks make bets all the time, and
They do,
I mean, at the time they made the bets, they probably weren't that risky. But I mean, one can always argue that they should have seen the Feds doing this coming or something. But I mean, you can't really predict the market.
I'm not sure how quickly though you can move
Yeah.
billions and billions of dollars. You know what I mean? Like,
Mhm.
I'm not sure. It's probably not just to press a button. You know, I mean, I'm sure it takes an unbelievable amount of negotiating and
Yeah.
getting things. I mean, because who wants it at that point? Like, who wants to buy it if within like a 6-month period the rates double? I mean, what are you doing? Like, you're done. I mean, it's like you can't even compete in a 6-month time frame at all. So I mean, like, what do you do?
Yeah.
You know, and then nobody wants it. So I mean, yeah, it's like, I don't know. I think all what they can do is liquidate it at a loss and hope they still have enough to keep functioning, you know?
Yeah. Yeah. At least seems like there's more control on it now, at least, and it seems like people are more confident that we will get a good outcome in the end. I'm not sure if the Federal Reserve is still gonna have their emergency meeting they announced. They probably will, but I'm not sure if they will be discussing the same things that was initially the plan. Now that the situation is calmed down a bit more.
So I think like this was just one bank.
Mm-hmm.
The question is, how many banks have done this? And I think that's what they're going to be investigating. Like, how much more of this is on the horizon? Because this was number 16 on the largest banks in America, right? So, like, they're going to probably want to check, like, what's everybody's layout, you know, in terms of their investments, like the 30 largest banks or something, you know?
Yeah.
Like, can we expect this somewhere else so that we can get ahead of it?
Mm-hmm.
You know, because if they keep raising rates, potentially it's going to get worse because these rates were only 1% and 2%. But what if another bank made them at 4% and then it goes up to 7%, and then you're still back? You're essentially still the same problem.
Yeah, it's just prolonged.
Yeah, like it's
definitely
rough.
Yeah, and I'm also wondering, I know that may not be relevant to a lot of people here, but I'm also wondering if we will see something similar in Europe eventually as well.
Mm-hmm.
Because, I mean, interest rates, as far as I know, is also increasing in Europe. But I don't hear that we have a lot of noise in the European market yet, but if it can happen in the US, I don't see why it wouldn't be able to be happening in Europe as well. So
yeah,
but yeah,
and I don't know how your interest rate like.
No, and I barely know either.
Is it tied to America's? I don't know. Like,
I mean, I guess there will always be some kind of ties, but it's not directly tied as far as I know.
Right.
And I think it's basically I I think it's kind of similar, but it does have its differences because we also have like the European Central Bank,
Right.
that basically like gives out the euro to the member states,
Mm-hmm.
and then some countries can have some exceptions. Like in my country, for example, we are exempt from using the euro, but on the other hand, the currency that we use is just like pegged to the euro, so it's like it makes no difference. But I guess sentimental value in not having to call it the euro. But yeah, but I think we're still tied to the European Central Bank because of this peg, basically.
Mm-hmm.
But I think the way that the European Central Bank prints money is different from the Federal Reserve in the US. Because I think the Federal Reserve in the US can just print like whenever they want, basically. Like they're in full control of the printer. And I think as far as I read in the European Central Bank, they are actually take something in exchange for the printing. So it's like it's not just printing out of thin air, but it's still printing with interest. So that it's still like based on debt, like the dollar is, like the economy. So it's still it has the same flaws, at least some of the same flaws that the dollar has.
Mm-hmm.
But the mechanism is a bit different, and I don't know if it's a better different or worse different or the same but different.
Right.
But there are a lot of similarities, and then there's the occasional difference.
Right.
But what seems to be the biggest difference between the European economy and the American economy is that the European Union is actually looking for ways to interoperate with cryptocurrencies and blockchain as a technology. Like they seem much more, maybe not friendly, but at least neutral towards the crypto space, and they are more like they're trying to find solutions where crypto doesn't have to interrupt the economy, which, in my opinion, I think that's the correct way of looking at it. Where the US has taken a more, I don't know if offensive or defensive stance is the proper word, but they have definitely they're more critical, at least, and it's much more about control. And I'm not saying that the European Union doesn't want control, because obviously they want control if they can get it. But I think they see opportunities rather than weaknesses. And I think the American government is quicker to jump the gun and say this is a liability, instead of seeing the potential strength of actually doing something with it. Like you just have to make something that people want enough that they would rather do it with the government than the anonymous Joe on the internet.
Correct.
Like I think that's really the difference, because like obviously there is more merit if the government is providing some, let's just say like a swap, for example. Like I would much rather put my liquidity in a government-owned swap, I think, because I know that they're not gonna run away with my liquidity coins. Like that they're not gonna rug pull me.
Right.
Unless I do something illegal, then maybe they will. But like that's a whole other discussion. If I just deposit my liquidity with anonymous Joe over here, I mean I have to stay awake at night checking if they ran away with my money yet.
Sure. Well, some would say that inflation is rug pulling.
Yeah.
It's just a frog in a boiling water, so you don't notice it.
I suppose, yeah. I can definitely see that, but yeah. I think there's varied opinions, because inflation is not necessarily a bad thing. It just depends who's benefiting from the inflation.
Correct.
If everyone was benefiting from the inflation, then it wouldn't really be a bad thing.
Right.
It's kind of a bad thing because it's very few people that actually benefit from the inflation.
Yeah.
So you're just making the richer richer, or the rich richer, and the poor people are getting more poor.
Mm-hmm.
And that's why inflation is bad. If the inflation was kind of distributed in a way where everyone like benefited from the inflation, then you wouldn't have the same problem that we have today. Maybe you would have other problems related to that, but it would be different problems than today's problems.
Mm-hmm.
But I don't know if the system would work in a scenario like that.
I don't think anybody knows. I mean, so much of this is no one really knows, I think.
Mhm.
I mean, if they did, then we'd have smooth sailing all the time,
Yeah.
right? But they don't know, and so they're always trying to do their best to.
Mm-hmm. And it's basically this problem that some crypto projects are trying to solve as well. I think it might have even been that problem that Terra Luna was trying to solve in a way. Like they were trying to solve inflation basically. How they had some flaws that we definitely couldn't not notice. But I know other projects out there are also trying to find out how we can use inflation as a strength rather than a weakness.
Right.
Yeah, and then of course there's the tax tokens where you pay taxes for when you do something like transfer them, buy them, sell them. I don't know if you buy if you pay taxes when you buy them, but definitely when you sell them and when you transfer them. And that tax basically goes to all the holders. So that's kind of an inflation thing, but again, this kind of inflation benefits the holders.
Mm-hmm.
So it benefits the people of that economy. So that would be a good type of inflation. And also it helps that the inflation, at least partially, also comes from quote-unquote taxes, you could say. Like every time you transact with the coin, you pay a tax, and that tax is distributed to all holders.
Right.
So that's kind of sustained. And then I think I don't actually know if they also have inflation where it just puts new coins in. I don't know why they would, because I don't think it's necessary. I think many of them are actually deflationary, which has its own set of problems. Like deflation is also not necessary, like it's not automatically a good thing.
Right.
It is a balance. And obviously when you tie up commodities to the system, then it gets more complicated. Like one thing is just having like this currency versus another, and that's fairly easy to balance. But when you also have these million different commodities that you have to balance it against, like now it gets complicated. Because not only are you balancing it against this currency and these commodities, but you're also balancing against how these commodities are balanced against this currency that we are balanced against. Like there's a lot of variables here.
Mm-hmm.
And it just grows exponentially every time you add a new currency or a new commodity.
Yeah.
And I think that's why it's difficult to find the solution on like how do we make everyone quote unquote equal, or at least how do we enable everyone to have the same opportunities, and then based on what they decide to do, they will be in different situations. But I think we are in a situation right now where everyone doesn't have the same opportunities. Some people happen to be in the wrong place at the wrong time, and then it's very difficult or maybe even impossible for them to really get out of that.
Mm-hmm.
And then we have some people that doesn't have to do anything to be in a good position. And I mean, obviously some people worked to be where they are, and I don't think we should discredit that. Just because someone is rich doesn't mean they got it for free. Maybe some people did, but there's definitely also people that worked really hard to get where they are. And I think it's important to also keep keep the ability to acknowledge that. Like obviously people that put more effort should also like get acknowledged for that.
Yeah, I mean, you don't want to remove the return on risk.
Yeah, definitely.
That's not a game that anybody wins on.
Mhm.
Because I think a lot of people forget that most of the time, most people don't take billions of dollars and put it in a safe in their house.
Yeah.
You know, I mean, that's what I mean. That's if you listen to the mainstream media, that's what you would think's happening.
Yeah.
Is that people who are taking money and they're just storing it,
Mhm.
and nothing's being done with it, and that's just not how it works. Like nobody's gonna do that.
No.
Because of inflation, you lose
Mhm.
value on that money, and so you're always on the lookout to get the most return you can for the money that you have, and so you're gonna continue to put it into funds, companies, investments,
Mhm.
new startups, whatever it is.
Yeah.
I mean, that's just the nature of how it really works, is that nobody's just sitting on a pile of money in their basement. Like Scrooge McDuck.
Yeah. Although it's probably a good idea to have some money. Like, yeah, it's as good as it is to diversify to invest your money. It's also a good idea to diversify. Definitely have some money in your safe if you have a safe, or in a bank deposit box, or just in the bank. But I would probably also have money outside of the bank, because like now we've seen banks can actually collapse, and banks are businesses just like any other business. Like it's good to have a safety net where you can say, I'm not going to lose this money. This money might be worth less tomorrow than it is today, but it's going to be there when I need it.
Right. Yeah, I mean, obviously risk assessment.
Yeah.
Part of the whole game.
Mm-hmm. So yeah, and everything about it is a balancing act. Like, how much money do I invest? How much money do I keep in savings? And where do I keep it in savings? Do I keep it in my bank? Do I trust my bank enough? Like, maybe I know that my bank is screwing me over, but at least it's better than if I had it in my closet, because I get robbed a lot or something. I don't know. So yeah, definitely a lot of moving parts and a lot of considerations as well.
Yeah. Well, I mean, the higher the interest rate goes in America, the less it makes sense for people to keep their money in crypto.
Yeah, that definitely makes sense.
So unless you're considering probably more like the top 2 or 3, Bitcoin being its own thing, of course, like you can see the return on that is potentially going to outpace anything the government's going to increase the interest rates to. So holding money in there makes sense if you think that long term it's going to continue to go up in value, right?
Yeah.
But a lot of these pretty much 99% of the other coins, like, you're not going to get a better deal than the 4 or 5% you could put it in safely. And that's why you just see the amount of locked value is so low, is because it doesn't make sense.
No.
So if interest rates go back down to like 0%, then it'll, or maybe not quite that much, but you know what I mean? But then all of a sudden it makes sense again. So.
Yeah, and I think that's also, obviously that's also part of the reason why crypto is in this stalemate, I would almost say. Like we aren't really moving down, but we're also not really moving up, because there's not a good argument right now for investing that much in crypto, because like the interest rates are increasing, so it is probably better to just put your money where the interest is, rather than putting it in this risky market. But I think as soon as they like as soon as their interest rate starts going down again, I think we will see more money go into crypto.
Oh yeah, I mean it's like I think it's inevitable, but it's gonna be a while because it's like our short of I mean I think that the feds don't have much choice because our inflation's still way above what they want it to be, and so like I don't know how long it's going to take to get that back down because they wanted it like 2%, you know, not 6%. And so it could take another year. I don't know. You know what I mean? Like, we really don't know until, you know, each report comes out and we can see what's happening. So, I do think they want to keep it. I also don't want to. They don't want a stock market crash either. Like, not like a major one. You know, like they know it has to correct some, so they expect losses or. But like I think that they would drop it if they thought there was going to be a massive sell off in stocks. I do. Because they don't want that either. So it's definitely a fine line.
For sure, yeah. Yeah, and then of course there's the whole like, is crypto commodities or securities? And I think that depends on a lot of things. Like I can 100% see Bitcoin as a commodity, like gold, or at least I don't know if gold is a commodity or a security, but it's definitely different from other securities. Like you still invest in gold, but you do it to like you don't have hopes for extremely high returns. I think it's basically just I want to put my money where I don't suffer too much of inflation.
Yeah.
I guess store of value.
Gold's not a business producing anything. So, I mean, it's got to be a commodity.
And I could see an argument for saying that Bitcoin is equally not a business that is supposed to produce anything because it's a technology, or at least the blockchain is. But Bitcoin is just built on top of the blockchain, but it really facilitates this store of value, I would say. I don't know. Does Bitcoin operate as a business? I don't think so.
No, I mean, that's the thing, right? So it's like you mine Bitcoin just like you would mine gold.
But
like, and it's then just a different kind of mining.
Yeah. And then you have other crypto tokens. Like I would argue some tokens work as a business, basically.
Yeah, I would agree to that extent. But I think Bitcoin is different in that there's no. I mean, obviously, there's no central control.
Yeah, Bitcoin is kind of its own thing, and I think it's fine to separate them. And I would say Ethereum, to a degree, is also its own thing, because it's also not operating as a business. Like the Ethereum network, like you can have people on the Ethereum network that operate ERC20 tokens as a business. But not all ERC20 tokens are businesses, I would say. So you have like a mixed bag of securities and commodities in like on the Ethereum ecosystem.
Right.
And then you have Bitcoin as a separate thing, which is also, in my opinion, not a security. It's
gold.
Yeah.
I mean, technically, it could be a currency. I mean, because people will accept it as a currency. So I mean, and that's obviously what Bitcoin is trying to do as well. So I mean, so many similarities there, with one being just a physical of it and the other one being a digital representation.
Yeah, for sure.
Although you can't make computer chips out of Bitcoin.
That's true.
I mean, people still use gold to like make things, you know.
Yeah. yeah, which in theory should increase the value of gold, right? As it gets used more. Well, I guess because it doesn't disappear, the gold, just because
Right.
it's
It
made into
never.
things.
Yeah. It doesn't. Yeah. It doesn't go away. It's not like other things that gets used. And you know what I mean? Like
Yeah.
it's not a
So I suppose
know.
gold is technically not deflationary.
right.
I don't. I guess it is inflationary actually, since it's still being mined. Gold.
I mean, gold is a value of something, isn't? I
Yeah.
mean, it's nothing. Like it's no more valuable than anything other than what everyone decides. So I mean,
Mhm.
you know, it's kind of a weird in that people decided that the shiny objects got value behind it.
Yeah. It's still one of the most manipulated markets in the world.
Yeah, I guess so. I know part of it's just traditional, but
Yeah. Yeah, and it's kind of funny because what was it? There was some, like, diamonds are advertised to be like extremely valuable, but
mhm.
like we have such an abundance of diamonds that there's no reason for the value to be that high.
No, it doesn't make sense because other than what you can make with diamonds, they don't do anything. I mean, it's
Mhm.
just we have a weird
Yeah.
obsession with putting value on things that are shiny.
Yeah.
It's like I could care less about diamonds as a thing, you know,
Mhm.
unless I'm making like diamond tipped bits or something where it's like it actually makes there's actually a reason behind it, like
Yeah. But it's way too expensive for that kind, like, because it's just so inflated in price.
hmm
It's almost like it would be cheaper for you to go and mine your own diamonds, because there's so much of there's so many diamonds in existence, and like it just doesn't make sense that it's priced the way that it is. But obviously it's just perception, like it's advertised as this like exclusive thing, but
Yeah, I
it
don't know.
it's not even
Yeah.
exclusive at all, really. Like I think it was something like there's less gold in the world than there's diamonds, so technically gold should be worth much more than diamonds.
hmm
But that's not how it is. Yeah, weird world. But yeah, I see we just about time, so
Okay.
yeah, I hope you guys enjoyed our conversations. It's a little bit different than what we usually do, and kind of the same as well at the same time. We don't have historical moments in markets every week. But yeah, this I think this will still be a historical moment, even if it doesn't get as bad as 28 or 2008.
hmm
So
Yet.
yeah, I guess next week we might be talking about the financial crisis that's currently ongoing. Who knows?
Well, if we keep raising rates, it's
Mm.
gonna happen. Like it's inevitable if rates keep going up. You'll see more banks will have issues
Mm.
with having funds tied up in very low interest rates and people wanting to get it out to put it in better ones. I mean, it's gonna happen if the feds keep doing what they're doing.
Yeah, I think tomorrow is gonna be a very exciting day, or a very it's gonna be a very what is it called? Like it's gonna set a mark tomorrow. It's gonna be interesting for a lot of people, I think,
Yeah.
depending on what like the outcome of everything, like what they find out with the Silicon Valley Bank, like what they're gonna do with, like, are they gonna give them the loan that they need until their investment can be withdrawn, and what comes from the Fed's emergency meeting. Like I think it's gonna be a monumental day. I don't know if that's the
Yeah.
right word, but yeah.
No, that's a good word. That's a good word.
So yeah, I'm definitely gonna be watching tomorrow. All right. Well, as I said, I hope you guys enjoyed, and yeah, we'll be back next week and discussing more exciting things. Hopefully we can kind of put an end to the current ongoings next week when we know the result of Monday and maybe the short-term effects of it. Maybe we can like wrap it up. If there's anything interesting to wrap up, of course. If everything just goes away, then maybe we'll just go back to business and as usual, and this never happened. Who knows? But yeah, I imagine it can't quite be like that. I think this is bigger than that. But yeah, we'll see what we find out during the week. So yeah, thanks for joining us, and we'll see you guys in the next one. Make sure to join our Discord and interact. All right, see you guys.
Bye.